In today's video, I want to talk about and compare the 5 best dividend growth ETFs that pay monthly dividends for long-term investors looking to retire off dividend income. These ETFs are growth-oriented and aren't particularly high yielders, which is usually the compromise with dividend investing, giving you either dividend growth or current yield, and sometimes both, like with SCHD for example. To find these ETFs, which you'll see shortly, I created a screen using Seeking Alpha's ETF screening tool, filtering by a 5-year price return minimum of 15% or more, since I want to own income assets that appreciate slightly, at least over this period, considering that the S&P 500 has appreciated greatly over this same time frame. The next filter is a starting dividend yield of at least 1.25%, which will improve the dividend yield on cost by starting at a reasonable dividend yield. And the next two filters that eliminated a huge portion of the initial ETF list was the 3- and 5-year dividend compound annual growth rate of at least 5%, which I think is a fairly low bar, but it actually isn't, and eliminated quite a few popular monthly ETFs like DGRW, DHS, and SPHD. And lastly, we have the distribution frequency filtered for monthly paying ETFs, because monthly distributions make living off dividends more practical, which gives us this very small list of only 17 ETFs, but the filtering doesn't stop here. Next, I eliminated ETFs that were sector, industry, or belief specific to target ETFs that offer diversification across multiple sectors, which in theory will offer stability through various economic cycles, which eliminated all of these ETFs. Lastly, I want consistent dividend income, which I subjectively defined as a year-over-year drawdown in dividend distribution of no more than 5%, which eliminated all of these ETFs, which gives us only these 5 ETFs sorted by the 5-year dividend CAGR, and we see that VSDA leaves the competition in the dust with an outstanding 5-year dividend CAGR of 20.7%. Here we have these ETFs in a spreadsheet sorted again by the 5-year dividend CAGR, and I added SCHD for reference since I think it's a great dividend growth ETF. The concept I'm looking to showcase here is the relationship between dividend yield, dividend growth, and projected dividend yield on cost, with yield on cost being the ultimate goal for dividend growth investing. With VSDA, the starting dividend yield is objectively low, but in the middle of this group, excluding SCHD, with a starting yield of 2.48%. But if we extrapolate their 5-year dividend CAGR of 20.7%, over the next 10 years, you would have an incredible dividend yield on cost from your initial investment of 16.3%, which is due to VSDA's phenomenal growth rate and modest starting dividend yield. This is the magic of dividend growth investing, but the assumption here is a big one, assuming that such a high growth rate will continue for 10 more years, which is one of the principal risks of investing for future yield rather than current yield, which is that the growth may not happen as expected or as it has historically, and you'll have to wait years for the yield on cost to exceed an ETF with a high starting yield. Another interesting aspect of this group is that VSDA has the highest 5-year dividend CAGR growth rate in the group but doesn't have the lowest starting yield, which indicates value in relation to CSA, DON, and CFA, which offer a lower starting dividend yield than VSDA and lower growth rates. This element of VSDA offering current value in relation to the group is something we'll cover later in this video. Behind VSDA and SCHD in terms of 10-year yield on cost is CDL, which is due to its high starting yield rather than its dividend growth. And the bottom 3 on the list are CSA, DON, and CFA, which is a function of the 3 having modest to low starting yields and modest growth rates. The next column shows the projected yield on cost after 15 years, which is a long time frame to make an accurate prediction, but nonetheless it further displays the power of compounding dividend growth, coupled with a reasonable starting dividend yield. With VSDA vastly outperforming the group, the more time we project with this analysis, the more VSDA will outpace its peers due to its faster dividend growth, and this analysis also shows that SCHD is another quality option for dividend growth investing. And the bottom 4 of the group over this time frame are more or less incomparable at this point, having less than half the projected yield of SCHD. The next column shows the historic 5-year total return, which accounts for dividends reinvested, and shows SCHD being the best total return performer, followed by CSA as the top monthly paying ETF, and just below is CFA, while VSDA, CDL, and DON lag the group. This column is just a point of reference, but the ultimate goal of this analysis is finding the highest possible dividend yield on cost, not the best total return performer. The next column shows the trailing price to earnings ratio, with DON being the value ETF of the group, and CFA being the most expensive ETF, closely followed by VSDA, which I think is justifiable considering its dividend yield and dividend growth. while CFA has a high PE ratio, solid dividend growth, but a very low starting dividend yield, which indicates to me that CFA is overvalued. Another aspect of CFA that I should note is that despite the strong dividend growth rates and making it through the filtering process, CFA is actually not a dividend ETF based on their methodology, and they include stocks in their ETF that don't pay dividends, but despite that, they beat out other dividend ETFs that do have dividend-focused methodology, and that's what led CFA to be on the list. The next column we have is the total number of holdings, which is one form of diversification, with CSA and CFA having by far the highest number of holdings. But when selecting quality dividend stocks, more is not necessarily better, which we can see by the strong dividend growth rates of VSDA and SCHD, which have only 174 positions respectively. The last column we see is the portfolio-weighted dividend payout ratio for VSDA, CDL, and SCHD. I only calculated the portfolio-weighted payout ratio for these ETFs since they have the fewest holdings, and I gathered the data manually for each stock within these ETFs. And the website I used historically for ETF payout ratio sadly doesn't always provide accurate data. The leader of the group by lowest payout ratio is VSDA at 48% of trailing 12 months earnings, which showcases that dividend growth is oftentimes a function of a low dividend payout ratio, since a company retaining more of its earnings means they have more money to reinvest in the business itself. Although that's not always the case, like we see with SCHD having a fairly high payout ratio as well as dividend growth rates, while CDL has a modest payout ratio as well as dividend growth. I think the clear winner of this analysis, considering monthly dividend distributions, the 5-year dividend compound annual growth rate, and potential 10-year yield on cost, is VSDA, with SCHD also proving itself as a solid quarterly distributing dividend ETF. But what makes VSDA so great? One aspect of VSDA that makes it exceptional for dividend growth is the comparatively low payout ratio compared to many other dividend ETFs, which is a key factor that enables sustained dividend growth. This is the result of VSDA's stock selection methodology. Even though dividend payout ratio is not a specific fundamental criteria, VSDA's methodology has one of the most comprehensive selection processes I've seen for an ETF, which includes tons of valuable selection criteria rooted in the intention of predicting dividend growth based on these 14 variables. Many of these variables are basic fundamental investing metrics that should be included in every dividend ETF, but aren't, like return on equity, income to debt, 5-year dividend growth consistency, the price to earnings ratio, and 5-year net income stability, just to name a few. But almost every one of these selection criteria are useful when determining business and dividend stability, and are what makes VSDA so fantastic. Another beautiful element of VSDA is its portfolio composition, with its largest sector being consumer defensive, making up 26% of the portfolio, and this sector is particularly valuable for a dividend investor for its earning stability through various market cycles. The next largest segment is financials, which may sound risky to some, but the financial companies within VSDA are generally insurance providers and asset managers, which are two very consolidated industries that have high barriers to entry, with some of the top companies including Franklin Resources, T. Rowe Price, Travelers, and Old Republic International. Otherwise, the sector composition for VSDA is lower in weight for various sectors like industrials, healthcare, basic material, and consumer cyclical. This portfolio composition may be the greatest risk of buying into VSDA due to its sector imbalances and heavy weighting in just 2 sectors, which make up roughly half of the total portfolio. Although the largest sector, consumer defensive, is arguably the most stable sector you can invest in. The last aspect of VSDA I want to showcase is the sustained dividend growth streak of the entire ETF adjusted by portfolio weighting, which is an outstanding dividend growth streak of 41 years, and better yet, the stock with the shortest dividend growth streak is still 8 years, and it's in the bottom 3 holdings by portfolio allocation. So VSDA is basically a dividend aristocrat or king ETF that focuses on sustainable dividend yield and growth. In summary of the top 5 monthly paying dividend growth ETFs, VSDA is easily my top choice for dividend growth and stability, and I think SCHD is another great option for dividend yield on cost that pays quarterly. Lastly, I just want to showcase that VSDA offers current value in relation to its own past through the dividend yield history since inception in 2017, which is currently at an all-time high of 2.48%. This graph of 10 years of dividend yield history, when available, is one of my favorite features of seeking alpha premium. And if you see value in it too, I have a link below that gives you $30 off a premium membership and a 7-day free trial. And if you want a copy of the spreadsheets I created, they're available on my Patreon, link below. Or if you're on a quest for strong international dividend ETFs, check out this video. Full disclosure, I am long VSDA and SCHD.
I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.